One is as a proxy for Chinese economic growth. For example, iron ore is very well correlated with the CCAT measure of the Chinese economy. It's also very highly correlated with Chinese imports. The relationship between iron ore and the Chinese stock market has also been very interesting over the last year. If you take iron ore versus the A50 index, starting from last year, it tracks the A50 very well, and in fact, it to a large extent outperformed the A50 for most of last year, although that has sort of reversed a little bit in the last couple of weeks with the big move down. This was only updated to the end of August, but the later chart is updated to the last few days, and we can cover that.
This is basically a graph where the bars are China's imports of iron ore, and the line is the spot price. What this basically, I've only taken this chart back to the beginning of last year, but what it basically shows you is that there's a fairly steady trend. Iron ore imports are actually down a little bit so far this year, but that's more been about supply issues. And you can see that, as iron ore imports were falling in that sort of first half of the year, the price was rising, which is a classic signal that, it's a supply issue driving a price higher. That has started to reverse in recent months. And I'd be very happy to talk about the price outlook in the Q&A, but the only point I would make about the iron ore price is $235 a ton in the spot market as it got to in May was clearly a very ridiculous, way frothy price that had no or very little relationship to fundamentals. Yes, there were reasons for iron ore to be going up. There were not many reasons for it to hit $235. The retreat since then to back below $100 a ton has been a bit unruly. And again, it's probably not entirely justified by the fundamental state of the market, but we do know that markets tend to get too excited on the way down and on the way up, and too depressed on the way down.
So the main drivers, demand was up globally. There's a hesitation now because of Chinese policy. What I do think is that the recent fall in iron ore price is not sustainable, because there is no oversupply situation really. Although there is a lot of comment about how much production China is looking to use, and I heard some reports this morning that it was talking about cutting by 250 million tons a year by 2035, which seems a little bit extreme. So I'm not sure whether that really is the case or not. But anyway, this has had a big impact on the iron ore price. But I think also, apart from a lack of investment in infrastructure, there's also been a bit of a lack of investment in new mining production and long term. I think a lot of the new expansions are really replacement tonnage and not so much brand new tonnage, and that's yet to pan out, I guess, in the future in terms of what the big producers can do, Vale, Rio, etc., and particularly in the Australian markets.
So here, if we see iron ore market outlook is like there is a major shift in north. If you see northeast, almost contributing to northeast is contributing to 85%, with Odisha producing around 66% of India's iron ore. 28% of growth is projected for the financial year 2022, with 135 to 137.8 million tons of production. And Southwest, if we see, the contribution is 15% with the projected 4% of growth in Karnataka by 2022, and with the 35 million tons of volume.
The simple answer is most of the banks and the analysts underestimate the vast majority of the time, and occasionally they do get it right. So yeah, I think the price will bounce back. I think it will go more towards the consensus numbers held a short while ago, which I think is more likely to be 130 to 160, and I think that is where we'll end up. Maybe the near term, maybe the medium term, but I think we'll end up close to that. I think I should also just quickly comment that certainly in the Western world anyway, when iron ore prices are high, steel companies do make a much better profit, cash profit. Their margins cash-wise are a lot better, and quite a few steel companies have survived purely because of high iron ore prices. So just something to think on.
I agree with Mr. Paul, and actually, high iron ore prices also can give the high margin at the end product. However, because if you see traditionally 45 to 50% of out of raw material, if cost wise, if you see 80% of the cost is the raw material cost and for the steel production, and then out of that almost 45 to 50% is the cost of coke or the fuel cost is there. So if you see that perspective, then in that case you can also get the higher margin or higher EBITDA at the end product.
I just wanted to point out that the CFR China price is close to $600, and that's that's still a couple of $100 above the FOB Australia price. So we are at sort of historic numbers. I wouldn't forecast any prices, but just to point out that it certainly looks fundamentally driven to a certain extent, and if the you imagine if China isn't able to buy Mongolian, they'll have to buy from everywhere else, and then everywhere else will just have to buy from Australia, and that just feeds itself. And I think that's why we have these numbers.
The most important thing that the Chinese government seeks to deliver is basically economic growth and raising the living standards of the population. So that's their social contract. That's how they justify their right to remain in power. So that is their primary driving thing, to create social harmony. And if they start to see that economic growth is under threat, I imagine that they would just simply reopen the stimulus taps, and once again you would see fairly strong steel demands, fairly strong iron ore demand. I don't think we're there yet, but that's what tends to happen. So anytime you see a crisis unfolding in China, or you think, oh my God, something horrible is going to happen in China, bear in mind that there's this kind of automatic backstop that has in the past always kicked in. Will it kick in indefinitely into the future? Oh, well, that's up for speculation, but I think there's a few more years left of it. So I don't actually expect too many bad things to happen with regards to China's slowdown. I think they don't want tear-away growth, but they don't want growth under 6%. They're looking for that sweet spot somewhere around 6 to 7%. And I think they will manage their economy to try and get that.